Leaders of the European Union are meeting in Brussels for a two-day summit to hammer out ways to end the debt crisis that just refuses to go away. With Greece, Portugal and Ireland bailed out, and with Spain, Cyprus and possibly even Italy waiting in the wings, this summit has to take some very tough decisions. On the agenda is a more integrated European Union with a banking sector united under a single watchdog. A fiscal union that gives the EU the power to throw out national budgets if they do not meet the required standards, and a political union, an idea that remains undefined. Now, while these proposals seem promising, the approach is not, and policymakers are fighting over the fine print. Many of the peripheral economies are in favor of pooling all the Eurozone debt in the form of Euro bonds, but Germany will have none of it. Chancellor Angela Merkel firmly believes that fiscal integration comes first and that such bonds can be issued only if problem economies introduce reforms, setting the stage for a showdown in Brussels. Reuters correspondent Kimberly Lim with the lowdown on the showdown.
As Europe gears up for yet another summit, there is more unravelling in the Eurozone, with Cyprus the latest thread and fifth country asking for a bailout. The message from policymakers is integration, whether it's Eurobonds, a banking union or the fiscal pact. But European leaders are so far unable to compromise on any of the proposed tools. Italy's Prime Minister Mario Monti wants to use Europe's bailout fund to buy up countries' debt on the open market. Part of the hope that it could bring down borrowing costs for the likes of Italy and Spain. But Germany's Chancellor Angela Merkel is still strongly opposed.
Fiscal union is important, and Germany's stance remains that the Eurobond is a last resort because they are the ones that are going to back a Eurobond and have to ultimately pay, and almost certainly if things do fall to pieces, they will be the ones that will be hit the hardest.
The meeting caps an intense week for Europe, with markets spooked that the region's governments will not come up with adequate measures to fight the debt crisis, and that more bloc members soon enough will be lining up for bailouts the Eurozone cannot afford. So is there enough cash in Europe's treasure chest?
So we already know that 100 billion of that is set aside to finance Spain's banking sector. But the combined temporary and permanent bailout funds are only at 500 billion euros. And with Italy and Spain's debt now hovering around 2.5 trillion, any new mechanism will have to come with more funding.
Some economists say in hindsight the design of the Euro bloc was flawed, and now officials are desperately trying to create a unified standard among Eurozone governments with various different policies.
Fairly clear that Germany is not going to offer a very grand bargain. Few things which the ECB will like, especially on banking union. The easiest step is probably to tell the ECB it will be the future supervisor of major banks in Europe. At least Germany is not going to offer a lot of extra German guarantees for the European countries unless these countries cede sovereignty, and that seems to be a big sticking point.
So as European leaders gear up for another meet and stock markets wait with bated breath, expectations are for the most part low ahead of the summit. But as some analysts say, that leaves the door open for a potential positive surprise. Reuters correspondent Kimberly Lim for ET Now.